Okay guys, today we are going to be talking about the strategy that actually works, the smart money concept. I don't know how many of you have heard about the strategy. You should testify about it good works in the life of men. Traders in this industry using the smart money concept strategy are doing excellently well. I will not go quoting the names of traders here that I follow personally that are doing well with this strategy, but I will teach you what the strategy is all about. Actually, I am on the USDT card pair, but just before we go to show you what the strategy is all about or how it works, I would like to walk you through some important terms that you should take into consideration in order to succeed or to master the strategy. You see time frame, master it. Basically, time frame is the range of time within which trades are analyzed or executed. Trend, you see trend, don't check with it. Now, I was talking about time frame. As you can see, we have, just follow my mouse, you have the 1 minute, 5 minute, 15 minute, 1 hour. Each of these, if I click, this chart will automatically give me a different pattern of chart, of alignment of charts, and each chart, each candle, pardon me, representing 1 minute gap of time. So have this in mind that whenever I pick a particular time frame, TradingView, which I am using now, automatically give me an alignment of charts within that time frame. We are presently on the day time frame, 1 day time frame to be precise, and as you can see here, I'm talking about trend now. I'm talking about trend. Remember, I said we need to master this. We need to understand what this is all about before we go about the strategy. Now, if you are looking like I am seeing here now, you will notice that this market is in a sort of consolidation now. Why do I say that? Let me minimize the chart a little bit. Good. This has all what we need. The market from this point, I will name it A. I will call it point A. I will call this point A. As you can see, I have labeled the point A. I want it to be visible. Okay, this point, from this point A, oh, where has it gone to? Take it back. Okay, I was saying network. Okay, good, great. I'm labeling this point A. From point A to, let me call this point B. From point A to B, we have an uptrend. We're on the day time frame, and from point A to B, we have a good presentation of an uptrending market. Why do I call this an uptrending market? Because this market from this point A to B, which we can see here, let me bring it down a little bit so that it can be visible. Good. The market from point A to B is breaking structures towards the upside. Now, I have used the second term, break of structure. Another term, break of structure. What is a break of structure? Break of structure. That is what we call break of structure visibly. You can see it there. This market is breaking structures towards the upside. If I should stretch it a little bit, you will see there is another break of structure here. Good. This market is breaking structures towards the upside. This market is breaking structures towards the upside. It's breaking structure towards the upside. From A to B, we have what we call an uptrend. In a trend, we have break of structures. An uptrend, to be precise, we have break of structures towards the upside. Break of structures towards the upside. If I should analyze all the break of structures we have here, We have from point A to B. They are there visibly. You can see them. I left one out here. I left one out. Good. Perfect. From point A to B, we have a break of structure. We have a structure, an uptrend, pardon me, causing that has in a trend, basically an uptrend to be precise. We have break of structures towards the upside. Now, when the market got to this point, instead of it to break this particular height that it created before and continue towards the upside, it began to consolidate. It created another low, just like it did here, but instead of it to push above this support level it created here, or this previous high, it ended here and began to reverse, going even below the previous support or lower low that it created before, causing a change of character. This is not a break of structure. Why? Because the market has changed trend. This is the high that it created before. It should have created another height above this height, and it should have created another low above this previous low, and another height above this previous height, lower height, so that the trend will continue. But this trend changed from the moment that the market created another level of support just below the previous lower low. So this movement, or this is what we call a change of character. A change of character is, in a simple way, a change of trend. Anytime that the market changes from an upward trend to a downward trend, it undergoes that through a process called change of character. So this market should have continued trending upward, but it reversed, and it did reverse to start creating a consolidating trend. It reversed to start creating a downward trend. Just like you can see from this level, the market began to to break structures towards the downside. This is a break of structure, BOS. This is a break of structure. This is another break of structure just here. Another break of structure. This is another break of structure here. We have another break of structure here, as you can see, and so on and so forth. Now the market got to this level. We have another break of structure there. There's another break of structure. You need to take your time so that you can mark out all of the break of structures that are visible. I'm explaining trend. Good. Now from this point, you will notice that the market began to consolidate. Remember, this is the previous lower height that it created. Now from this point, no, this is the you need to be careful so that you don't call something what it is not good. So that you don't call something what it is not. Okay, from here you see that the market is in a sort of consolidation, because it's supposed to continue breaking structures towards the downside. It it's supposed to continue breaking structure towards the downside, but rather it is within a particular range. It has not crossed this height. It is, let me just remove this because it is not clear. It is not clear that from here the impulsive move is just, if there should be a break of structure, I think it should instead be here. Let me clone this. Good. This is the break of structure. Fine, at this level. Now this is the height that it created, but from here you see we're in a kind of consolidation. It is not breaking heights and lows any longer, it's consolidating. Anytime that the market, this is not very clear, but I pray I can show. Okay, good. Let me just demonstrate so that you see what I am talking about. Remember, we've talked of uptrend, downtrend. Now we are about to see what a consolidating trend is all about. This is a kind of liquidity here, but I want to show you what a consolidating trend look like. It is not taking you towards a particular, it's just moving towards a particular time with a particular range, not breaking up or down like we saw with an up or down trend. It's just consolidating within a particular range. That's what we call a consolidating trend. The three types of trend: uptrend, downtrend, and consolidating trend. I wanted to demonstrate to you what a consolidating trend basically is, so that you have an idea in case this one is not very visible to you. A consolidating trend look like this. Look, excuse me. Consolidating trend looks a kind of like this. This is a consolidating trend. It is not going up or down, just between a particular range. That is what a consolidating trend is, and that is a kind of what we have here. That is a kind of what we have here. Now let's move to the next term. We have what we call liquidity. Let me go to a smaller time frame so that you can basically see what liquidity is all about. I've clicked the 5-minute time frame. Goodness, can't even see what is there. Okay, 15-minute first. Okay, now we are on the 15-minute time frame, which is our entry time frame. I take my trade or my entries from the 15-minute time frame. That is why I say is our entry time frame, and I want to show you what liquidity is all about. Now if you watch what the market is doing here right now, if you can watch from this point to this point, the market is breaking structures towards the upside. From here to here, massive sell, and the market at this point, actually, if you watch, it's not taking a direction yet. It's not taking a direction within this range. It is not selling massively, and it is not buying aggressively as well. It's just within a particular time frame. It's just consolidating. It's just giving us a type of funny. This is what we call liquidity. It's where money is sitting in the market. Wow, you will understand this better when I want to take a trade. So it is still okay if you've not understood it here, but what I wanted to show you is from the time frame that I am seeing now, which is my entry time frame. From here to here we have massive buy, and from here to here we have massive sell. And while we are waiting for market to retest this level so that we might take a sell, it is consolidating here. It is a sort of creating funny patterns here. This is what we call liquidity. It will eventually move towards our entry point here. here, somewhere here. But before that, you see, it will be here creating these funny patterns, and before it moves down, before it eventually push towards the upside, before buyers enter to push the market towards the upside. Liquidity actually is a point where there are a lot of indecisions and inassurances in the market. Buyers at that moment are preparing to take momentum, either to buy or to sell, and that is why you see that anytime that this happen, from this point there will either be massive buy or massive sell. Before that, we have that liquidity point, and you will see, you will kind of create this kind of thread like structure towards the upside or towards the downside. That is what we call liquidity sweep. Liquidity sweep, you will see it in most cases. Sometimes if you place trades, instead of it tapping into your zone and going back to dish you the profit, this liquidity sweep sometimes go beyond your stop loss point and take you out of the market. So this is a sort of liquidity zone that we are seeing here. This point equally as well is could be termed a point of liquidity, because you see it consolidated here before, going up again. From here to here we have massive buy, a sort of consolidation here before it goes up, and so on and so forth. You'll be seeing a lot of that. From here to here we have that massive buy, here to here massive sell, here to here massive buy. But from here you see a lot of indecisions here before the massive sell, and eventually the massive buy. A lot of indecisions here, the massive sell. So liquidity is that point where there is inassurance in the market to take decisions within buyers and sellers, so much so that there is no massive push or sell in the market towards a particular direction. Yes, because if there's massive sell, we'll have the structure towards the downside. Massive buy, you have the structure towards the upside. So that is what we call liquidity, or liquidity sweep, as I was showing you here. Now let's move to our next term. Remember, we need to explain the term before we take trades, before I show you how to apply the strategy. Network. Good. Back to the day time frame. Okay, after we have what we call break of structure. I'll be showing you what break of structure is all about. I will show you, I will further, when I'm taking trade entries on the trade, I will show you what break of structure is. But let me just elaborate on that a little bit more. Now, anytime that you analyze a trend, anytime you see clearly that the market is creating a particular trend, maybe a downtrend like it is the case here, take note, just as we're talking about trend, the strategy I will show you only works on up or down trend. So if the market is creating consolidations like is the case here, stay out. Wait for it to take a direction. Wait for it to take a direction. You trade using the smart money concept when the market is either trending downward or upward. When it's making this funny pattern, stay out, because you might end up being surprised. Okay, I was talking about the break of structure, BOS. As you can see here, on a downtrend we have a lot of break of structures towards the downside, as the market is creating lower low, lower heights, lower low, lower heights. Just like we have a lot of higher height, higher lows when the market is on an uptrend. Break of structures towards the upside caused by the higher heights, higher lows created. Now we have the next term, which is order block. An order block comes in when you want to take an entry. For example, I'm not a swing trader, I'm not taking trade from a day time frame. I can't wait for days, I trade daily. But let's assume that I was a swing trader and I wanted to apply my strategy, which is that of the smart money concept. After I've analyzed that the market is downtrending like it is the case now, Within this time that it is creating this funny pattern, I will patiently be waiting to see which direction it will take. Now, this is my like break of structure towards the downside. I was expecting that it would break structure here as well, but it didn't, and it's a sort of reversing, as you can see now. But what will confirm that this market has actually reversed is if it should break this particular height that it created before. If the market should eventually break this height, then I will have my confirmation that it is moving towards the upside now, and I will begin to look for point of end. I will begin to look for buys, no more sells. And okay, let's just forget about this particular let me let's just forget about this particular, because I can't take a trade from here. Okay, or better still, let me go to a lower time frame. I think, yeah, let me go to the 15-minute time frame because I'm a day trader. 15-minute time frame. We have the 15 minutes time frame now. We have the 15 minutes time frame. This is a live chart. Let me just behave as if I'm taking a trade. I'm taking a trade now. This is the 15 minutes time frame. I want to explain what an order block is. This market is for me to know whether it is trending either up, down, or consolidating. I'll go to the 4 hours time frame. From the 4 hours time frame, the market is in an uptrend from the 4 hours time frame. Let me go to the 1 hour time frame. From the 1 hour time frame, the market visibly is still in an uptrend. As you can see, the market is breaking structures towards the upside. As you can see here, the market is breaking structures towards the upside. That is how I know that the market is in an uptrend. It is breaking structures towards the upside. It is creating higher heights, higher lows, higher heights, higher lows, higher heights, higher lows, higher height, higher lows. How do I call higher lows? Because this low is above this low. How do I call it higher height? Because this height is above this height. So that is how I know it is in an uptrend. Let me now go to the 45 minutes time frame. 45 minute time frame. From the 45 minutes time frame, the market visibly is still in an uptrend. It's breaking structures towards the upside, creating higher heights, higher lows, higher heights, higher lows, higher heights, higher lows, higher heights. This height and this height are the same. So the market is still to create a higher height from the 45 minutes time frame. But we know now that the market is trending towards the upside. It will be favorable for us to take trades towards the upside. That is why it is important to know the direction the market is taking, the trend the market has is important, because it is from that particular time frame. These particular time frames have permitted me now to know the direction the market is taking. Which should I take? Is it a buy or a sell? I know I should take a buy. It will be favorable to me for me to take a buy, because the market is moving towards the upside. Now let me go to my entry time frame, which is the 15 minutes time frame. From the 15 minutes time frame, the market is in a sort of consolidation. The market is consolidating. The market is consolidating. This is a clear consolidating. I will call this liquidity. I will call it a sort of liquidity. That point of indecisions before the massive buy, because we are talking of buying here. This is liquidity, a point of liquidity here. This particular point. Let me just point it out for you. We have it here. Liquidity zone. From this point, the market will either break down, causing a change of character, or break up, causing another break of structure here. But while we are waiting for that, I was trying to say that we point out an order block when we have analyzed the direction of the market. I know I'm looking for buys now. Why? Because this market is trending towards the upside. How do I take the buy? How do I take the buy? We are going to seriousness now. We are going to serious things right now. How do I take the buy? What I will do is that I will point out the previous I'll point out the last break of structure that we had. Good. I want to take a trade, and it is a buy, not a sell. It's a buy. So from here, let me just remove this. Let me remove this. We have this break of structure as well. This break of structure here. We have this other break of structure here. Mark them out so that you know the direction of the market. I will not see this if I was not doing what I am doing now. I will not have actually seen it. But because and we have the last break of structure there, right there. This one extends to here. Good. What is the origin that caused this break of structure here? This break of structure here, it is this candle, and market is retesting. Good. We are taking an entry here. This is very favorable for us. So all that are trading USDT, Canadian dollar, they can take an entry now. It's even already late, because on the moment that market got to this point, this is our order block. Order block. What is order block? I've taken all of this time marking all of this and making all of this analysis to show you what an order block is. From this point, the market will move upwards towards the upside. When you've analyzed the trend, pointing out your break of structures towards a particular direction, all of these things I was doing right from here, were not actually too necessary, because I should have just begun from here. But I wanted to see whether we could see it from a bigger point of view, which was not possible, because there's this massive move here that cleared out all of these points, and the market is still moving upward. Now, what was I saying? When you point out the last break of structure on a particular chart, on a particular pair, we are trading USD Canadian dollar now. Now, when you point out the last break of structure, point out the origin that caused the break of structure. The break of structure very fast is this candle here, this particular candle. Point it and mark it out. That is your order block. That is your order block. But it is only valid and confirmed to be your order block when I'm talking about the strategy already. What is the strategy? The smart money concept. When there is this gap here, we're on the live chart, the market is retesting this level. It has retested and it's even going up already. But I am showing you what played out. You see here, it happened. The market went up, retested the order block, and gave us this massive buy. The market came here, retested again, and gave us this massive buy. The market has retested again and is about to give us the massive buy. So why is it doing so? Because all is set to place. One, we have the breakout structures towards the upside, confirming that we are taking buys and not sells. Two, we burned out the last breakout structure. Let's say that this has not happened before. All of this has not happened before. We are just focusing here. For example, we point out the last breakout structure that was this particular guy here. You see that market tapped into this zone and poof, it went up. Now taking from here, what is, if I was to focus now at this level, at this point, what is the origin that caused this breakout structure here? You see, this is the candle here. I mark it out. You see that the fair value gap is there. This gap, this particular gap, is what we call fair value gap. Fair value gap, which is the next term that you need to know. Fair value gap. I will point it out. Fair value gap. You see that the gap is there. The gap is there. I point out my last breakout structure. Identify the origin that caused the massive buy. Point out the last candle before the impulsive move, which I did. Is my order block. Now mark out the fair value gap, which is that gap that serves like a sort of magnet that will pull the market back to this order block. When that is done, I place my order. If I was trading this particular pair, just like I can take a trade now, I'm tempted to take a trade, guys. It's a long, or as I call it, a buy. I would have taken my entry from this level, and my stop loss would be a little bit below, just like that, and my take profit will be at this level. So that is it, and market will play out just like that, just like that. So this is the strategy that I've been using to make profit in the market. The market might even still retest, but will definitely get to a take profit, which is this point, and will come out. So that is the strategy, guys. I've talked of the order block, the fair value gap, which is the gap within the impulsive move, that empty space that is separating the upward candles. The fair value gap, let it be close to your order block. That is what guarantees you that the market is going to come back to tap into the zone before it dish out the profit. Now talking about take profit is this particular point of exit. When the market gives me that profit that I am expecting, it will hit my take profit, which is this point. And my stop loss is this point where the market will hit if this market should trade against me. If this market should instead go down, at this point the market will automatically kick me out, causing me only these losses. This red here, this red zone is what I will lose if the market should go against my will, against my analysis. So the next is change of character, which I've explained earlier. So guys, this is what we have been doing. This is how we have been analyzing the market. I'm analyzing the market. This is the strategy we have been using to come out with the successful trade that you have seen all this while. Thank you for watching. Thank you for your time. Stay tuned as I bring you the next video. Ciao.